In this day and age where financial security is a priority for everyone, we all dream of building wealth, achieving our goals, and enjoying a comfortable future. That is where investing comes in. Investing is like planting a seed today so that you can enjoy the harvest tomorrow. Hey guys, welcome to my YouTube channel. If you're new here, welcome. Please consider subscribing below and turn the post notification bell on. On this channel, I share information on finance, entrepreneurship, and lifestyle. And if you're a returning subscriber, you know the vibes. Please give this video a thumbs up. Don't hesitate to leave a comment below, and don't forget to share with your friends. Now, let's paint a scenario. Imagine a tree that is rooted in the ground, and its branches are reaching for different parts of the sky. Investing is like nurturing a tree by putting your money into different assets to grow over time. There are different opportunities to explore when it comes to investing. But before we get to that, let's talk about the basics. When are you ready to start investing, or how do you even know that you are ready? 1. When you have a stable income. Stable income could mean employment income. It could also mean income from a business or other forms of earned income. Once you are able to tell that you have certain consistent income coming in, it could be a specified amount or the amount could vary, but you are sure that you are expecting income within specified period consistently. That means you have stable income. 2, you have low debt. You want to make sure that you don't get into investing when it would be counterproductive. Make sure that you have paid off most of your high interest debt and you are now left with the low interest debt. That way you can manage your investing and prioritize accordingly. You do not want to start investing when the returns you are earning from your investment is only earning you a small percentage of interest compared to the interest that you are paying on the loans that you currently have. Next is for you to make sure that you have built your emergency fund. Your emergency fund is recommended to be 3 to 6 months of your monthly expenses. Next, you need to know your risk level. Are you a risk taker, risk averse, or balanced? Knowing your risk level will help you determine the kind of investment that you should get into. Remember, the higher the risk, the higher the reward. I understand that a lot of us might not know what our risk level is because we could be beginners, or you could even already be an investor, but you are not sure where your risk level is. There are some factors that will help you determine your risk level. 1 is time horizon. If you have longer period to invest in the market, let's say 5 to 10 years, then you have more time to wait for the market to correct itself in case of instability. That way you might be able to take even more risk. But if you have just 1 to 2 years or less to invest in the market or to wait for your money to yield returns, then in that case you might not be willing to take a high risk because you don't have that much time to wait for the market to correct in case of a downturn. Secondly, liquidity. Do you have stable income? Do you already have your emergency fund? Do you have cash, or do you have cash equivalents? These are assets that can be easily converted into cash. Do you have all of this in place? This would also help you determine your risk level. And lastly, age. This somewhat falls into time horizon, as younger investors tend to have higher risk tolerance. So now that you know if you are ready to start investing, you also know your risk level. How do you start investing? 1, you need an online brokerage account to get started. You can sign up with any of the brokerages that we have in Canada, like Wealthsimple, RBC Invest, Questrade, TD Investing. There are a plethora of them in Canada. All of these brokerages charge different fees, and this could be one of the factors that would drive your decision on which one to use. I've personally used Wealthsimple, RBC, and Questrade because they charge low commissions and the interface is just very easy for beginners and friendly. If you decide to sign up for Wealthsimple, I have a link in the description. You get $20 if you sign up with my referral link. Once you have signed up with a brokerage, now you would have to decide, do you want a self-directed portfolio or a managed portfolio? A self-directed portfolio means that you would handpick your stocks by yourself. So this would be for people that have some knowledge in investing, you know what stock types to invest in, you have understanding on how to read company financial statements, you are up with the news, and you have knowledge on how to go about the process. But if you don't know how to go about doing that, then you can also use managed investing. With managed investing, these brokerages have fund managers and people in wealth management that would help you manage your portfolio by picking stocks and ETFs that they would invest. For the most part, most managed portfolios usually invest in ETFs and index funds, and you would also still get a very decent return. So now decide, do you want to self-direct your portfolio or do you want a managed portfolio? Personally, I've done both, and I think both options are great. It just depends on your personal experience. As a beginner, you might be leaning more towards a managed portfolio, or if you also don't have time to manage your investment, you can also decide to go for a managed portfolio. Now that you have signed up with a brokerage, you also have a managed portfolio account. I also encourage you to automate the process, because with investing, you need to continue to invest over time for you to see great results. This is the best way for you to take advantage of dollar cost averaging, by investing a fixed amount periodically. For me, when I first started investing, I would put $100 bi-weekly into my managed investing account, and over time, if I feel like, okay, I can now do 150 or 200 from every paycheck, then I would always invest $200. So you can decide, do you want to put in certain specific amount every week, bi-weekly, monthly, or however you please. But make sure that you have a fixed amount of money that you're investing consistently. This is the best way to take advantage of dollar cost averaging. Now, there are different types of investing based on your risk level. Investment type by risk. If you are not willing to take any form of risk, you want guaranteed principal and financial stability, you can consider no risk investments. Example of this would mean to put your money in HISAs, which are high interest savings accounts, or invest in GICs, which are guaranteed investment certificates. Please bear in mind that this kind of investment would only give you a very low return, because you are not taking any risk whatsoever. Your principal is guaranteed, and sometimes the return that you could earn from this kind of investment could even be below inflation rate. So somewhere around 3.5% to 5% would be what you'd be looking at. This definitely is not a bad start, because it's way better than just leaving your money in a regular savings account. You earn interest on daily basis if you put your money in a high interest savings account or towards a GIC. The next category is low risk level. Here you are looking at safety and income. You would be considering investing in government bonds, treasury bills, etc. You would earn a moderate return, which could be slightly above inflation rate, somewhere around 5.5%. Next category is moderate risk level. Here your financial goal is growth, and you'll be looking at investing in assets like ETFs, index funds, stocks, REITs, and a lot more. Your return will be increasing returns. It could even be as high as 10% per annum. The last category is high risk level. Here your financial goal is based on speculation and leverage. You'll be looking at investing in options, futures, cryptocurrency, or doing day trading. With this kind of investment, you stand the chance of earning very high return or even doubling your capital, but you also stand the chance of losing it all. I mostly recommend for beginners to start with no risk, then progress to low risk and move on to moderate risk level. Please note that the rates that I have mentioned are based on average return within a 20-year time frame and should be taken lightly. Pause or take a screenshot of this investment risk pyramid on the screen to help you understand this concept better. Finally, if you reside in Canada, it's very important for you to know the difference between investing with a registered account and a non-registered account. With registered accounts, you get to enjoy tax benefits by using your TFSA or your RRSP. Think of them as your financial superheroes. So any investment that you make with your TFSA account or your tax-free savings account would be tax-free. Whereas if you invest with your RRSP account, your taxes would be deferred and will be sheltered till a very long time or whenever you decide to withdraw your investment. So this registered account would help you hit your financial goals quickly, as you can grow your investment without paying tax tax right away. With non-registered accounts, these are accounts that you use for investing. You would need to use your registered account whenever you maximize your contribution room in your TFSA or your RRSP, or also if you decide to not utilize your contribution room just yet, you can also invest with your non-registered account. I encourage beginners to use their TFSA account when they want to start investing. In order to not make this video unnecessarily long, there will be other videos where I'll be explaining the pros and the cons of using your TFSA account or your RRSP. But for now, I recommend beginners to start off with their TFSA account. And you need to take some level of risk in order to earn reward. Don't get carried away with any of the misconceptions that people say that investing is only for rich people or you need to have a lot of money to start investing. Nope. You can start investing today with as little as $50 and grow it over time. If you decide to sign up for any of the platforms that I have mentioned, feel free to use the link that I leave in the description box. There will be a bonus or a level of incentive for you and I. Let me know in the comments if you find this video useful. I try to make it as simple as possible. Let me know if there are other parts of investing you would also like me to touch on. Leave them in the comments. I'm looking to read from you. This would help me make valuable videos in the future. Thank you very much for watching. If you enjoy watching it, please give this video a thumbs up. Don't hesitate to leave a comment below and don't forget to share with your friends. I'll see you in another video. Bye.